Welcome, ladies and gentlemen, to Commodity TV and our online interview series. We want to get an update from Gold Royalty, and David Garofalo, the CEO, is here with us. Good morning to Canada. How are you, David?
I'm well, Johan. Good to see you.
Yeah, good to see you. Thanks for taking the time. I'm a shareholder of the company. I want to disclose that upfront. And I must say, we love royalty companies because you are not directly involved into the mining risk. You have a very large portfolio. I think I saw in your presentation 245 royalties now you have closed. Man, that's a lot.
It is, and it's very heavily concentrated in some of the best jurisdictions in the world. Over 80% of our royalties by number and by value are concentrated in Nevada, Quebec, and Ontario, which share three important advantages. One is significant geological prospectivity, acknowledges some of the best gold districts in the world, low political risk, and low regulatory risk.
Okay, super. So let's talk shortly about Q3, as I think it was another record, right? If I got that right. And you made money. You had a profit. Congratulations.
We did, and we have positive operating cash flow for the first time in our history. And that's remarkable when you consider we started 3 years ago as a concept. We went public in March of 2021 with 18 royalties, none of which were cash flowing. So it was very much a concept created on the back of an envelope by my co-founder, Amir Adnani, and myself, and then grown through diversification, through the acquisition of 3 of our peers over the course of 2021, but also we've grown through 4 distinct pillars beyond that. We've grown through, as I said, M&A, but we've done project financing, we've done third-party royalty acquisition, but also we generate royalties organically. About a third of our royalties were created through our sweat equity at no cost to our shareholders, so no dilution, and provides us potential for infinite rates of return on those 70 plus royalties we created through our generator model.
Okay, super. If we look at, as we said already, profit is there. That is fantastic. That leads, of course, to the question, how is Q4 running? Are you in line with your expectations or maybe better?
Well, we're poised to deliver nearly a tripling in our revenue this year from last year. And the big drivers of that are some of our most recent royalty acquisitions, including GROY.TO, upon which we have a royalty and just started production this year and is ramping up to full-scale production this quarter. So that'll be a big driver of royalty growth. We've already received 2 royalty checks in Q2 and Q3. They were relatively small as they were starting up operation. We expect a significant growth in that royalty revenue in the fourth quarter. We announced the acquisition of Varus, a copper stream on that earlier in the year by Adriatic Metals. Adriatic is now ramping that up to full production over the course of this quarter as well. And we have received our first copper streams from that so far this quarter. So that'll be a growth element as well. And Canadian Malartic continues to grow from underground production where we have significant royalty coverage. We have limited coverage on the open pit, but as they mine more and more of their production from underground, we have a 3% NSR on virtually half of the underground resource at Odyssey, which is the underground extension, Canadian Malartic. And we've also benefited from the acquisition of Cozamin this year. A full year of production from that. That's a copper silver mine in Mexico. We're operated by Capstone. This is their highest grade mine within their portfolio. And earlier last year, we announced the acquisition and project financing of Borborema, which is going to be Aura Minerals' newest mine in Brazil. We're getting pre-production royalty payments from that this year, and that mine is over half constructed, expected to be in production in the first quarter of next year. At that point, our royalty revenue really steps up as they start to deliver ounces. So we've had multiple sources of growth this year, leading to that tripling in revenue this year. And we're looking at 60% compounded annual growth in our revenue right through the end of the decade.
Wow, that's really a lot, I would say. Yeah, so all those mines and royalties you just mentioned, they really start to kick in from next year onwards, right? Because now the ramp-up phase is done and then go full throttle, right?
Yeah, next year we get a full year of GROY.TO and we get a full year of Varus, again, both of which are new operations. And also, we get the benefit of Borborema starting up operation next year. Again, we've been getting limited pre-production royalty payments, but as that steps up, and I hasten to add, both Varus and Borborema have massive expansion potential. which will be realized once they achieve commercial production at very low capital intensity. That being said, we own our royalties streams outright. There's no capital calls on any of them. We get that free optionality in exploration and expansion as a result of the nature of the business model that we have as a royalty and streaming company.
Okay, super. So that means for this year, the guidance was 13 to 14 million US dollars revenue. So for next year, we can then already say 20 million plus.
Well, we'll provide guidance in that regard as we get mine plans from our operators. We're dependent on that. We don't provide our own guidance. So all we do is compile the guidance of our individual operators and then provide our guidance. Basically, it's simple arithmetic. So as they provide their guidance in the first couple of months of 2025, we'll be able to compile our own guidance. But we do expect very significant growth next year in our revenue. And now we're in positive operating cash flow. Next year will be positive free cash flow next year for the first time in our history. And that will allow us to take a little bit of debt off the balance sheet. We have a small amount of debt that we used in terms of a revolving credit facility. We'd like to maintain that availability within our revolving credit facility as we look to continue to grow and acquire new royalties going forward.
Okay, super. With Vareš, that rings a bell to me because I think I saw in your presentation you have approximately 90% is gold in your royalties, and I think it's 8% is copper approximately. And with Vareš, you also have a copper stream there. So the question is, are you thinking in the future, let's say, to diversify a little bit out of the gold, going more into, let's say, base metals or, let's say, other metals of interest, meaning maybe a little bit more silver, because silver I really rate also extremely high?
Yeah, absolutely. I think you will always maintain, I would say, at least 70% in gold. But diversifying into LME level metals or LME metals makes a lot of sense for us because quite often deposits are not singular in terms of their metal exposure. They're quite often polymetallic. And we like polymetallic deposits that have significant precious metal components in them because those tend to have longer lives. And they tend to have naturally low cost structures because of the byproduct credits. So they're competitive mines with longer lives and the ability to expand and grow over time with significant geological upside. So we like those polymetallic deposits, but we'll always, as our name indicates, stay focused on gold. I've spent equal amounts of my career in base and precious. I've run Hudbay Minerals. I was within net mining for many years. So I built as many copper mines as I have gold mines. So I believe in the fundamentals of copper. So having a little bit of copper exposure, a copper kicker, if you will, within our portfolio makes a lot of sense because the fundamentals are so strong. And quite often that copper is within a precious metal deposit. So we have a royalty on all of the metals, not just on singularly on the copper or the gold within that deposit.
Super, perfect. I like to hear that because I'm also very bullish for copper in the long run, as I am for silver anyhow. Silver even more in the short run, I could imagine. Do you see any, let's say, risks with larger royalties or coming in within the next 1 or 2 years? Do you think something might be difficult, maybe delayed, or do you see everything is really nice on the plan?
Well, the biggest sources of growth are going to come from the biggest assets we have in the portfolio, which is Canadian Malartic and the Odyssey Underground Extension. It's going to be Côté, and it's going to be Ren, which is the underground extension of Goldstrike. All those are owned by well-capitalized, large-scale operators. In the case of Canadian Malartic, Agnico Eagle, the third biggest producer by market cap in the world, with and Ren, that's owned by Barrick and Newmont within the Nevada Gold Mines joint venture. And Côté, yes, IAMGOLD is a mid-tier player, but the mine is built and it actually has already achieved commercial production. So they're just optimizing it right now. And not only are they well capitalized now and that risk is behind them, they've actually exercised the option to increase their ownership in it. So they have the balance sheet capacity now, not only to optimize the asset, but increase their ownership. So they're in a great position. And that's where I would say virtually most of our growth is coming from those three assets within those well-capitalized operators. Beyond that, our growth is coming from Borborema. Aura Minerals is a diversified operator with strong track record of building and operating mines on a very economic basis within Latin America and Brazil in particular. And then Adriatic Metals, which is $1 billion plus market cap company in Australia, owns Varus, and Varus is already ramping up to production. So that capital risk is behind them, and we feel that quite confident that we're going to get not only the benefit of that ramp up, but they have significant expansion potential for very low capital intensity at that asset. And I expect they'll realize that expansion in short order once they achieve commercial production at Varus.
Okay, super. So as I saw also with your cost structure, that is really going stable, I would say. It's not rising. So that raises the question to me, because you started in the beginning to pay a dividend, then you withdrew that. Will you restart maybe with a dividend 2026?
Yeah, I think that's a realistic time horizon for us to bring that back on the table, at least talk to our board about a return of capital to shareholders in various forms. It could be dividend. If we continue to be at these depressed valuations, it could be a share buyback. I mean, those are the options that we have in front of us in terms of returning capital to shareholders. So really, the question is, where are we going to get the best bang for the buck, the best re-rate, the best allocation of that capital to get optimum return for our shareholders? And I can tell you that we'd be delighted to have that conversation. We were preserving capital for the growth that we've been able to achieve over the last year, in that we've deployed $90 million of new capital on 3 massive new mines. And that includes Varus, it includes bringing Cozamin into the table, Borborema. Those are assets that are really going to not only deliver longer term growth, but also immediate cash flow growth. Those are massively accretive on a cash flow per share basis in the short term. And so that's why we did those acquisitions. But the underlying quality of those assets mean that they're going to be around for decades and have significant expansion potential in the medium to long term.
Okay, super. So I would say from the business side, everything looks extremely well, except share price. But there you are sitting in the boat with everybody else, I would call it. As I just saw, I mean, we were talking about it. I saw the chart with the worldwide SIC and the gold price, and it's a gap like this with all the producers. And as we can also say that you are like a producer, I would call it, with your royalties. But the thing is, how do you see 2025 that this really, I would call it undervaluation or disvaluation in the sector might maybe dissolve? And what is your view, let's say, on the precious metal markets?
Why don't I start with precious metals, because I think that provides maybe a contextual framework for the other question. But look, I think that regardless of who had won the U.S. election, I think the refrain would have been the same. It would have been expanding monetary supply and also expanding fiscal stimulus. I think that's inevitable regardless of who had won the election, whether it would have been Donald Trump or Kamala Harris. So I think they have no choice, given the exorbitant amount of debt that's been strapped on at the government level in the U.S. They can do nothing but inflate that debt away. They're going to have to continue to expand money supply and introduce stimulus into the market in order to make that debt a smaller component of GDP. So they're going to have to continue to stimulate. And we've seen interest rates pivot to much lower levels, and that refrain will continue in the foreseeable future. And I think that means that gold will do extremely well in an expansionary monetary environment that we find ourselves in. And it's not like that's new. That's been in place for 50 years. I mean, you can go back to the early 1970s when the fiat currencies were decoupled from the gold standard. It's been a one-way trade. You know, we've seen the gold price go from $35 an ounce to almost $2,800 an ounce. Well, what's happened to the purchasing power of the U.S. dollar? It's gone down 96% over that period of time, and that's not a phenomenon that's recent. It's going to continue for the foreseeable future, particularly given that global debt to GDP is at 350%. So, what does that mean for the gold sector? Well, we all love a higher gold price. That means increased profitability for most of us. I think it's a struggle for most producers, particularly among the larger cap players, because they're not immune from cost inflation that's happening in the general economy. And we've seen that. The correlation between the gold price and all-in sustaining costs over the short, medium, and long term is plus 90 R squared. Like it's uncanny. And so all-in sustaining costs will necessarily go up as the gold price goes up, because gold price is a barometer of real underlying inflation. And so it's difficult to be a producer in that environment, and also in the environment where you have shrinking reserves, because the juniors have not had access to capital for a dozen years. reserves are declining, and all of the producers have been basically playing Pac-Man. They're cannibalizing each other. That does not add value. That increases shares, shares outstanding, but does not increase reserves and resources. That's why I think the best place to be positioned to get optimum leverage to the gold price and leverage to exploration is in the royalty and producer universe. You've heard me say, Johan, it's not an accident. After 35 years of building operating mines, I'm running a royalty company. I believe in the fundamentals of gold. What I don't believe is in the ability of the producers, particularly among larger cap players, to grow, and certainly not grow per share value. And that's why you're best positioned as an investor to get that top line exposure and protection from inflation within a royalty vehicle, and also get the leverage to the exploration upside of the operators that we own royalty on their properties. Our operating partners invest over $200 million a year in exploration, over 500,000 meters of exploration drilling. You know what we contribute to that budget every year, Johan? Zero. We get all of that upside without having to pay for it. And that's a really good position to be in. And they need to conduct their exploration in order to preserve their reserve profiles within their existing operations and feed their massive industrial complexes. So we're going to get the benefit of their exploration efforts without having to pay for it.
Absolutely. And they have to replace also what they have produced.
Absolutely.
That's also very important. So what's then your gold price prognosis for next year?
$3,000 is basically a slam dunk. The question is, how far beyond that will it go? And I really think it depends on how much stimulus the U.S. introduces, and by necessity, the other Western nations do in order to maintain competitive advantage with the U.S. So the U.S. is going to rule, and the U.S. will be necessarily stimulative because of the reasons I mentioned. They need to inflate debt away. They're going to introduce stimulus in a fiscal standpoint, but also from a monetary standpoint. I think that's going to continue unabated for the foreseeable future in order to sweat that debt away, inflate it away.
Yeah, absolutely. You have also a view on silver, because I think that's also a very interesting situation, how I see it.
Yeah, I agree, Johan. And I won't talk about silver fundamentals. So I think silver fundamentals are stronger than even gold, because there's actually industrial utilization of silver in a very major way. But let's set that aside for a minute. Let's talk about silver as a proxy for gold. And historically, in bull runs for the gold market, you've seen gold to silver price ratios narrow to 40 to 1. It's close to 100 to 1 now. It makes no sense. In a bull run for gold, the silver should vastly outperform gold in a bull run for gold, because that ratio will necessarily narrow. It has the potential to outpace gold performance twofold in order to get to more historic norms in the type of bull cycle that we're experiencing now for precious metals.
Absolutely. I see it the same way, definitely. So far, I think Q4, we did not really talk about it, but it looks all good.
Yeah, look, we're forecasting to achieve our production guidance, or revenue guidance, of $13 to $14 million, which puts us in a position to actually deliver record revenues. We've already had record revenues for the first 9 months of this year, and we'll be in record territory for the full year as well.
Perfect. I love that. Record territory. That's a great final word. David, thank you very much. I think you guys did everything really right. And I'm a happy shareholder despite the share price. But I think it's you are a really great quality company with a fantastic growth path, as you have described. And that's exactly where I want to be invested in. And I'm pretty sure that this undervaluation will be corrected soon here. Definitely.
Yeah, absolutely. And I should add, just to put an exclamation point on this, there has been insider buying in the stock in the recent days that we filed. And I continue to be a buyer in this market, just because this valuation is ridiculous. And I can't think of a better place to allocate my personal capital than back in my business that's so severely undervalued.
Definitely, I see the same way, especially when you restart with the 1 cent dividend per quarter. Then it's getting also interesting, because by today that would mean already over 3% dividend yield. I like that. Super. David, I wish you very, very well. Merry Christmas. All the best
Merry
for
Christmas
2025. And I would say keep it going with the team. And we talk in January, February, when you have your numbers out.
All right. Looking forward to
Super.
it.
Thank you very much. Thank you. Yeah, ladies and gentlemen, that was David Garofalo, the CEO of Gold Royalty. And you heard it. The business is going extremely well. The third quarter was again a record quarter. And also the fourth quarter is, I think, really on the plan how they wanted it. 13 to 14 million US dollars as revenue for this year is budgeted. I think they're going to make that maybe a little bit more. And for next year, we see already well over $20 million in revenues. And we will discuss then maybe the restart of a dividend payment in 2026. That's exactly what we want to see from our companies. And a great financial solid balance sheet, 245 royalties. And now the big ones are really coming in with the ramp-up phases of Varus, of Borborema, etc. Cote, you heard it. And 2025 is going to be a big year for the company. Make sure you get some shares because my feeling is they are not so long any cheaper like this. And I'm in. You should be too. Thanks for watching us. Merry Christmas to all of you. Bye-bye from Switzerland.